Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Brian.
And today it is the two of us going over some really important information, like always. But at the top, we're going to spend the bulk of our time today talking about the NAR settlement and what it means for VA. We talked about this last week. We have to cover this again because there's some new information, but also a little bit of new ideas potentially. So we're going to go over some of those. And then some other things regarding FHA even, land affordability, and the spring housing market forecast. So right at the top, we're going to go right away into this, Brian. And this is from mortgageresearch.com. Now, this is a place we don't normally cite on the show. It's very mortgage-centric, very mortgage data-driven, and usually only for people inside the mortgage industry. However, due to the NAR lawsuit, this is an important one we need to go over because last week we talked about the what this means for veterans and VA buyers in the process, basically because the buyer's settlement or the buyer's commission can't be advertised on MLS and what that means and all that. So this article is 6 potential scenarios for veterans after the rule change. So from mortgageresearch.com, there are plenty of possible outcomes for veterans from status quo to a major shakeup for veteran buyers. Likely it will be somewhere in between, and below are potential scenarios for users of VA homes. So let's go one by one. There's 6 different scenarios. We'll just pit stop through them real quick, okay? So number one, they cite sellers predominantly continue to pay buyer's agents.
So, hey, hello.
What a novel idea.
Wow. No, so, I mean, right off the bat, it only said the buyer's agent commission may not be advertised in the listing. So, clear picture right there. You just can't put how much the buyer is going to be making on that deal, nor can it be, advertised up front.
Right.
But that also drives quality buyers, people that are, probably strongly approved. And that is also something that sellers don't want to lose out on because it could easily take away, really good offers that could be presented to them just because compensation is not there for the person that has it. When you make a deal, it usually is like, hey, I have a buyer. Whenever type of business you do, it's like, hey, I have a buyer, you have a seller. How do we get compensated for our service? Everywhere down the line, no matter what business you are, service, referral business, you have to compensate wherever the deal comes from. That's just the way that business is done. I just feel it's the natural law of living. But, again, we'll see how they actually, get this done.
So the seller may bypass offers requiring buyer side commissions. But again, this brings up a whole nother issue when it comes to ethics inside real estate. And we've heard this argument already pertaining to this is, agents are already showing or only showing buyers homes that have the highest commissions. Well, that's not necessarily true, and it still requires the buyer to like that house. If you show me a house I think is ugly and stupid and I don't like it, and that's not the floor plan I want, but it doesn't matter what the commission is paying the realtor. If I don't like that house, I don't like that house. So to a certain degree, and I do hold the line on this, as a consumer, if I don't like the house, I'm not making an offer. I'm only going to make an offer on a house that I like, and that house will have some sort of commensurate commission connected to it, and my buyer's agent's going to get whatever that is.
And I mean, nowadays with, being able to jump on Zillow, Redfin, right away, you can already see the houses, whether they don't have any commission being advertised, you're still sending the buyer's still going to send that to their buyer's agent and be like, hey, I want to see this. And if that house isn't propping a commission, what's the buyer's agent going to tell them? Hey, I'm sorry, that was not paying, so you're probably better off just calling them yourself and showing up.
So check this out. And this is something that may be a little foreign to some of the viewers, but those who are inside the industry, if you're watching this, you might feel this is familiar. In this section, it says that in theory, sellers could make a practice of removing all VA offers from the stack. I think that's called steering. Actually, it's not actually steering. It sounds a lot like steering.
It's like breaking one law to make one law pass.
Well, yeah, because that would be a problem too, right?
Yeah.
Like, we're not going to accept offers from people that have this kind of financing.
So now that's discrimination as well. Hey, whoa, guys, come on, now we're running thin line here.
Okay, so number one is the sellers predominantly continue to pay buyer's agents. That is probably one of the most likely things to happen. Again, the commission lawsuit says that doesn't say that sellers cannot pay buyer commission. It's that the buyer's commission cannot be advertised on the MLS service in listing. Okay, so option or idea number 2 here is VA changes its rule. Ding, ding, ding. That's what we talked about last week. The easiest thing to do would to be make an amendment to the VA rule that says that the veteran buyer in their non-allowables is not allowed to pay buyer side compensation to their buyer broker. That would be the easiest thing. And the VA is already working on a solution according to an official who was quoted in that Housing Wire article we talked about.
Yeah, okay.
Yeah, go ahead, read it out.
So it says the VA will under significant pressure to change its rule. In March 2024, NAR President Kevin Sears wrote an open letter to the VA Loan Guarantee Service Executive John Bell. It stated VA current rule will put veterans at a disadvantage of home sales where sellers don't provide compensation.
Yeah.
So it's basically like we were saying, if they don't if they're not showing the compensation up front, the buyer's agent can, steer to not show that property. But at the same time, that takes away that opportunity from the buyer if he really likes that property. If that property would have been a great fit for him, just because unfortunately your buyer can't get paid. Now the buyer itself, the reason why they're even there to show the property, can't even get the house.
Well, and that brings up another concern question is that, the VA eligibility is considered a benefit. And is it a benefit if you can't use it? So one of the things here they're talking about is when they're engaged somehow with the Department of Justice with this to review the implications and evaluate how they can best ensure that the program remains an attractive option for veterans. But it's supposed to be, eligibility is supposed to be because you served and you met the criteria for having this benefit as a service member. And then if it means that you can't use it, then it actually zeroes out the net of the benefit at all.
It is really not just a benefit. You're still going to have to pay. I mean, you still got closing costs, and then now a buyer, so you're in a way paying equivalent to.
So I think one or two things, or maybe both have to happen. Number one, they changed the rule. It says that the buyer is allowed to pay for their agent or their buyer side broker fee, number one. And the other thing is allowing the seller contributions to be increased to cover that.
Yeah.
That's another thing I don't think I saw in here, but there is a cap, for all of you who don't know, there's a cap on how much compensation a seller can give the VA buyer towards closing costs, fees, and et cetera, as part of the transaction. I think it's 6%, right?
6%.
Okay.
Yeah.
Now, if the agent were to be paid, let's say 3%, maybe the VA could increase their total allowable compensation from seller up to 9%, provided that expenses didn't exceed 6% and commission could be up to 3 more. And that would be a nice way to do kind of both and.
But if you look at it, you'd still have to, if you're going to put it into the loan, you're still going to be financing it. And
it's already in the loan now.
It is, but now you're going to be able to basically do it upright.
It's already in the loan now. So you're buying a VA loan for 100%, and the house is $750,000. That $750,000 includes the seller's commission and the agent's commission, and you're getting a loan for $750,000. So it's already included now.
Either way, they're already paying for it. I agree with you. They're basically already paying for it. They're just not disclosing it and saying, "Hey, that's what it is."
Yeah,
you're already buying it at the price that the seller's selling it. It's already baked in the commission.
Right. So it could be a point of clarification where, on one hand, they're allowed to pay the buyer broker commission if they just make an amendment to the rule that says they can't, and then maybe increasing the ability or the amount that they can have for seller contributions or closing costs.
Yeah, no, I think that'd be a great solution, because then now you make it a level playing field. It's fair for everybody, and you can continue to move forward.
Well, again, and sellers still have a choice. This isn't handcuffing sellers that they have to do that. They can go, yeah, no thanks. So it's not that it's forcing that upon someone else. It still takes the buyer and the seller to agree on the terms and conditions of the contract.
Yeah.
Number three here, we have VA buyers forego agent representation. This is a terrible idea. I understand it's a scenario.
Horrible.
These are not. By the way, these are 6 potential scenarios. These aren't 6 potential solutions.
I like that.
I don't like this at all. This is definitely not an ideal scenario for veterans. There's a lot of steps that, if you are unfamiliar with this could be problematic for you representing yourself in the largest purchase of your life, most likely. And there are a lot of people to coordinate.
I mean, I'll put you a very simple example. When you get sued or when you need to go to court, you don't represent yourself, because you might know about the law and how it works, but you're going to want someone that's an expert that detailedly knows exactly how to work their way around, how to be able to get you the best terms, how to be able to maneuver in a rocky scenario when you don't understand what all these terms are, or all these documents that are coming at you that you have never in your life seen, because you go to work, you're a parent, and you do that for a living.
Yeah.
So all this stuff to you is like literally a complete foreign language. So just think about it in that perspective. Would you like to go, literally unrepresented with no protection, nobody's having your back completely, and you saying, "Hey, I have the best intentions for myself." Yeah, you do, but you might not know much of anything.
Well, and I mean, look, let's talk really briefly about all the people that are touch points in the process of buying a home using your VA. You have the loan officer, a processor. You have a title office, escrow office. You have a home inspector, that the home inspector would need to be coordinated and scheduled by the realtor. You have an appraiser, especially a VA appraiser. If anything in the inspection or the appraisal needs to be repaired, that has to go through a request for repairs to the selling agent for them to consider, and then rebuttal, go back and forth.
Yep.
Then you have to make any sort of negotiations for who's going to pay for what and how it's going to get done. Then you actually have to, if there's anything that has to be repaired prior to closing, you have to get the service people out there, whether it's plumbing or electrical or it's foundation or
Now you're
roofing.
project manager.
Hold on, yeah, that. And then you still have people who's going to review all your disclosures with you, or your state and federal disclosures for buying a house, and you have to talk to the transaction coordinator. Now, those are just the people I thought of like right now as I'm walking in here to talk about this with you. There's probably others I'm just not thinking about, but those are the most common points of contact you're going to have. And also, you're still working every day, managing your life. Like, this is why you have a realtor.
And a lot of these documents or these steps are very time sensitive. So you need to get them literally within minutes. People that are like having your information that could move very quickly, you're going to have that ability to do.
Okay, park there for a second. This isn't because we're saying you have to rush through the process. It's because there are certain time frames that if you miss those time frames, you could be risking deposit if you have an earnest money deposit. You could be risking other sorts of terms that you've agreed to with the seller that if you pass that line on the calendar, you can't go back and go, sorry. Like, no. So that's a great point. I didn't think about that in this section of the show, but that's a great point because it's not just about doing things quickly. It's about doing them in a timely fashion pursuant to the contract. That's an illegal agreement.
And efficient. You might get it done, but then, oh, no, that's not what we need. That's not what we need. When someone that's been doing this already knows what needs to be done, they could easily pass it through their system. And it's like, that's going to alleviate a lot of money, a lot of stress, and a lot of just, bad situations.
I don't want to go too hard on this, but this is almost leaving the door open for loan officers to represent buyers and just work with the transaction coordinator. I'm just saying. Okay, next thing, another scenario.
Oh, I want to know what the agents think about that in the comments.
Agents, and I'm not saying that it should be done, but it totally leaves the door open for that.
No, but like it says, it doesn't.
Well, we already talked to escrow. We already talked to title. We are the lender. We're already talking to the bank. Like, anyways, agents think twice about working with veteran buyers. That one sucks too. Because again, now this is discrimination. You're saying, based on the type of financing you're doing, I don't want to work with you. First of all, they're claiming that working with a veteran could mean working pro bono. That is fine. Could mean is a big, asterisk right there. And there are few agents who can afford to work for free. There is almost no agents that will do it for free.
There's absolute. I don't think I know any agent that will.
Yeah, I mean, unless you're just doing it as a good deed and a good service, I understand that people might want to do that, but that means they got to be making money somewhere else in their life.
Yeah, of course.
But if you choose not to work with veterans or warn the veteran they can only make offers on homes with seller-paid commissions, again, isn't that redlining? You're saying you can't go see these homes. Like that's why we have redlining rules. We have rules in place so that you can't do this.
Any home that you like.
Right. Oh God. Okay.
But not those.
So yeah, I would hate to see agents step back from helping veterans who are using their VA home loan, but I do see that as a scenario. There's going to have to be some sort of compensation for agents. There just is. Let's go to the next one. 5, VA buyers stop using VA loans.
That's
definitely a scenario, but again, voids the benefit, or what we call the VA home loan benefit.
Yeah, exactly.
It could be a very costly choice.
And when the VA, I mean, you're comparing it to other loans, you have no down payment, no mortgage insurance. You really come in with the minimal amounts of closing costs. It really just puts a sour taste in your mouth if you're a VA buyer. Like, why would you even consider using your VA when you?
Well, you can't. That's what I'm saying. It completely negates the benefit from existing.
I don't like that.
Yeah, I don't like it either. And it's not just a business thing. It's like, again, if you're telling people as a part of your service, you get XYZ, ABC, 1, 2, 3, all these benefits, and we're just talking about the home loan benefit today, but there's a lot of benefits you get as a veteran and active duty service member. And this completely negates that if you just don't use your VA loan. Now, I will also say the caveat for us here at Mortgage Heroes, we have had plenty of people who their initial purchase was their VA loan, and then they refinance out of it. And when they PCS somewhere else or they retire somewhere else, they have their eligibility renewed and they can use their eligibility again.
Yeah.
So that is a case that's more strategic and more with financial planning, long view legacy planning in place, and having much more, let's say, what's the word I'm trying to think of? Like you're really attuned to what you want long range, and you make 10, 20, and 30-year decisions, not just impulse choices. So my point,
long-term thinker.
Yeah, long-term thinker, but attuned and like more financially like thumb on the pulse of what you want for your life in the future, and leverage the different situations you're in. And if you have BAH, you're basically using your BAH to buy a home.
That's the leverage,
You can refinance out of it later to a conventional loan and then go use your VA again somewhere else.
Yeah.
You could be using your VA to buy a multi-unit property. I mean, there's things we don't talk about right now that are done and that we have done with people to help them basically enrich themselves.
Yeah.
So,
And there's a lot of ways to leverage it. It's just basically understanding how you can maneuver through it.
yeah. Okay, and then the last scenario here is veterans make offers only on unwanted homes. But if they're unwanted for a reason. Why would the veterans just like, oh yeah,
I'll take that one.
home?
No, and then predominantly like those types of houses are people that are going to come in, invest in them, and then turn around and sell them for profit. But if we know anything about the VA, is that they're also one of the most strictest when it comes to the appraisal and the property in itself. So if the property isn't up to VA code, or there's certain things that the VA doesn't allow for, good luck trying to get that house financed. It's not going to happen. It's happened where we get back that guideline. Hey, you have this. The seller doesn't want to repair because they're just, hey, I'm not going to invest another $13,000 to take away that termite or whatever that case might be. So again, you are out of luck. You can't move forward with that property because VA guidelines state so.
Yeah, the appraisal is an important part of the VA loan. So is a home inspection. Home inspection.
Home infection.
You know why? You said unwanted homes, like, oh, it's infested. There's an infection of infestation. No, it's like, so basically having the appraisal cleared is a condition of getting VA financing. And if the appraisal has things that need to be repaired or fixed, there might not be ability to finance it anyways with VA. So, okay, Brian. So I'm thinking of this article, the things that are most likely to happen is that the VA changes its rule and that buyers agents are still going to get paid somehow.
Yeah.
I really just think that's going to be the way it is. So we'll have to see, but we'll definitely come back to this one and talk about that. Maybe there's some new things that we'll see in the weeks coming up to July 1st. We're only a couple of months away now. We'll see what that looks like. But
oh God, that's quick.
All right, moving on. We have the Community Homelanders Association urges FHA's equal treatment of homebuyers despite commission status. So here we are, back-to-back commission lawsuit ramification articles. This one is coming from Housing Wire. And the CHLA this week submitted a letter to the Federal Housing Administration, FHA, that urges the agency to provide comparable down payment treatment for FHA borrowers, regardless of whether or not the seller is willing to pay the home buyer broker commission. Now, really quickly before we dive into this, I want to delineate. This is the seller willing to pay the home buyer broker commission versus being able to advertise, right? So we were talking about how the commission is that you are not allowed to advertise what the commission is. This does not mean, the lawsuit does not mean that the seller cannot pay the buyer broker commission. And in fact, in areas where this has been tried, sellers actually still end up paying because they want to attract the right buyer and they want to sell their house faster. So I'm going to leave that there. Let's just make sure we're separating the idea of a seller willing to pay a buyer commission and the lawsuit saying that the buyer commission cannot be advertised. I think there's some miscommunication about that. I don't think that we've said that as clearly in some of our other episodes as well. So I want to make sure I clear that right up front.
Perfect.
All right. So with the association also agreeing to abolish the participation rule requiring sell-side agents to make an offer of compensation to buyer brokers, NAR is really just dealing with every agency at this point. So FHA is now involved. There are three concerns in their letter that they address. The first is they're contending that large swaths of first-time home buyers who already face major challenges to enter the housing market will not be able to meet higher down payment thresholds necessary to pay the buyer's agent commission.
And that's true. I mean, if you already take, let's say, 5 years to save up your down payment and you still got closing costs, on average 3.5% to 5%, and then another 2% for closing costs. Let's say 7% on a high end, and then another 2.5%. You're almost pushing 10% to be able to buy a house if you need to pay for your buyer's agent along with your closing costs and your down payment. Where are people getting this money on if they can't come up with down payment barely, and you see a lot of these down payment assistance programs, how are they going to come up with the rest of the money? I just don't see that being something that they can do up front, and it's going to have to get squeezed into somewhere else, or somehow, some way, it still needs to be paid out.
I think this is more of a functional question, because it's like, well, they just save more money. Well, great. That's easy to say. So how long did it take you to save your 3.5% down? And how much longer will it take you to save 3% more to pay the agent? That's really the question. Is if you have been able to save 3.5% down, and let's say, to your point, 3% for closing costs or whatever. Well, what's that? What time frame can you save that additional 3 on top of the 3 and 3.5 already? So I don't know the answer to that. That's going to be different for every person, of course.
Yeah, it is.
But it's in as much as it is a down payment, because the commission's already rolled into it, it's still going to be rolled into it.
Yeah, it's either
moving
way.
forward. So I'm not really sure there's going to be much of an issue here. I think it's really going to be coming down to like you're chasing the market already, and now you might be chasing it even harder.
I think they're just making it very difficult to say, hey guys, we're just going to finance them.
Yeah.
Just put them into the loan. You're already financing over $1 million, $250,000. Like, hey, minus, what's another, 2% going to do now at this point?
Well, the other concern is that the Community Home Lenders Association, they raised this other concern about pre-existing biases that already impact borrowers using FHA. There's this assumption that if you're using FHA, then you can't qualify for a regular conventional loan, or you don't have 10% down. There are situations here where I know FHA was the better way to go because the FHA financing was actually cheaper than the conventional financing that would have mortgage insurance. So if FHA has, lower down payment, conventional has a higher down payment, they both have mortgage insurance. Well, the one that has a lower monthly payment could be FHA and is not necessarily a worse off borrower.
I think before a lot of people would think conventional is going to be like the strongest because it's, the most, strictest. So if you're able to get approved, you're going to have a strong profile. But it really comes down to what product is going to get the deal done. And what I've noticed is that sometimes, the conventional might be the best route on paper, meaning you have the great credit score, you have the down payment, but the rate and the mortgage insurance still are going to be a little bit higher because they made a little bit of adjustments on your loan level pricing for conventional loans. Now, sometimes at a higher price point, the FHA might actually turn out to be a little bit cheaper because of the fixed lower mortgage insurance they just dropped, even though it's a little bit amount. But sometimes when you do the numbers, they're off by not that much, and sometimes it used to be a lot different, but now they're not too far away.
What your point is, and I want everyone to hear this part, is that your point is it can make a big difference. I mean, if the difference was $150 a month, you'd consider that. If it's $5, you're like, nah, okay, no big deal.
No big deal.
If it's, maybe even if it's $100,
but
like,
in this present time, $150, like we'll make it or break it, and even $200, you're still kind of like, oh, okay, I'd rather go that route.
Yeah, but this has biases, and I think the bias they're referring to is that FHA is commonly just known as a first-time home buyer's loan, and it's not always first-time home buyers. I mean, I've even heard people misstate that FHA stands for first-time home buyer, and they don't know what the A stands for. It's the first. I'm like, no,
that's the first time I hear the First Time Home Buyers Association.
Yeah, so FHA is the Federal Housing Administration, not First Time Home Buyers Loan, but it is definitely associated. So I think the bias is true that might impact borrowers because there is a stigma. There just is. It's just been around for a long time. I think sellers would be inclined, if they're wise, to look past that. But again, that's just one man's opinion.
Oh,
go ahead. No,
like I said, it's whatever product's going to get it done.
Yeah.
Sometimes conventional route doesn't work. DTIs are too high up.
Yeah.
But FHA is like, I'll let you go another 10.
Same argument as last week. Look, if the VA buyer makes a higher offer, where are you gonna look at it? Like if they offer you more than the other offers and it's a VA, you're gonna look at it. If you have the highest offer in the stack is the FHA, like you're gonna look at it. All right. The third concern here in this letter was the highlighted third concern stems from the potential for inflated sales price based on commission impacts. Well, again, this goes back to what I've said about this on camera and off camera. Unintended consequences as a result of a well-intended lawsuit.
Yeah.
Now, the lawsuit wants a certain thing to happen, but there's these ripple effects through the industry. And wouldn't that be a kick in the gut that there would just be more inflated sales prices based on the commission impacts? Oh, well, we're going to inflate our price by 3% because now
we need to pay another 3%.
Right.
Now
even though I had already agreed to sell it at this price, including that 3%.
So it's funny because they go on to say, the letter provides a series of prototype loan scenarios that could spin out the settlement. Illustrating CHLA's arguments among scenarios is one that CHLA hopes will become standard practice.
Yep.
Every home seller willing to pay the buyer agent commission as a courtesy without extracting a higher price in exchange for doing so.
Yep. There you go. I mean, super clear.
I mean, at the end of the day, consumers and sellers aren't going to be like, yeah, no, you know what? We're courteously going to pay you. Like, they're going to try to get as much as they can for the sale of their property and then still be willing to pay, but at a higher price when they feel that they're getting the deal that they believe in.
Yeah, and you're also making the argument for why there's agents on both sides of a deal. And we kind of talked about this before, where, it's like you need someone representing you because, I know there are very few people that have been able to do double-ended deal very well, where they actually are representing the seller and the buyer. And I know that they lean towards the seller. It's just kind of the way it goes. But there are circumstances where every once in a while you'll get an agent that can really honestly represent both sides very equally, if you will. And in this case, I mean, this is exactly why. If you are going up against a seller who's got a really good representative agent, and you're on your own, good luck. So you're going to be out negotiated probably.
If you're being if you're being acquitted of a crime and you're going to do some time, and they said, hey, the district attorney is going to also represent you, which his job is to get you in jail for the law that you broke or whatever you did, are you going to be like, hey, yo, can you represent me?
No, of course not. I understand what I'm saying.
You know what I mean? So it's like the seller's going to try to get this listing agent's trying to help the seller sell at a max point, and the buyer's going to try to bring it down. So I'm like, why are you going to go with the person that's going to say, hey, you could get it at this point. Yeah, I'll help you. But at this point, it's probably not the best point for you. It's not the price point for you is what I'm saying.
And also get your own counsel. Don't represent yourself in court.
Yeah, don't do that at all. It didn't work out.
Yeah, not going to work out.
I had to pay the fee.
All right. Well, under the existing FHA policy, if sellers continue to pay buy-side real estate agent commissions and fees as a matter of state and local law or custom, and if commissions and fees are reasonable in amount, existing policy would not treat those payments as interested party contributions, provided all other requirements are met. And this has to do with the settlement agreement being able to have seller-paid buyer broker fees in the transaction as part of the deal. Again, I think that's going to be the best way it goes. Honestly, the easiest way to do this is just leave it alone and make any exceptions you need to the program so that it continues to flow and that you don't have too much of an overarching adjustment that negatively affects buyers and sellers. Yeah. I think that's my thing here. And I know that, we've taken a little bit of pushback in the comments about this topic and, boo-hoo, agents are making so much money. Hey, look, I'm not going to sit here and pretend like it's super easy to go get a deal. And if you're saying that in the comments and you don't do it, then there's not a lot of room to say that. Sorry. I get it. Yeah, I'm not going to cry for rich people all the time. That's fine. But the point is that these rules are affecting people that are just like you and just like us, that work hard every day, that need to have a way to get ourselves into home ownership. And if you cannot, and then rules unintentionally make it harder, that sucks. And I think you'd agree.
Yeah, I agree 100%.
All right, Brian, we're going to move on. We got housing affordability has just totally collapsed. Quote, has just totally collapsed. Economist says, this is from CNBC.
Just
would-be home buyers need to earn $113,520 a year to afford the typical home in the United States, which is 35% more than what the typical household earns annually, which is $84,000, according to a new analysis by Redfin. In February of 2021, that was the last month when the typical household earned more money than they needed to afford the median income.
Wow.
So 3 years and 2 months ago, that was the last time when the typical household earned more money than they needed to afford the median home.
That was the just point.
That was the pivot point. So now at that same time in there, remember the key date, March of 2022. What did the Fed start doing in March of 2022?
They started rates.
They started adjusting their Fed funds rate up. So housing costs are clearly outpacing the median household incomes, and that strains affordability. We see it here. We know you see it in real life as well. Now, that's not the entirety of the story. So you also have to remember that there have been a lot more cash offers being made on homes right now, and that represents in some lower mortgage applications, in addition to the affordability or the inability for people to get approved. So that's kind of that there as well. In this, though, the affordability really took a kick in the nuts October 2023, which we know is when mortgage rates hit their peak. That was when we were looking at 8%. People were not happy. I think it made everyone have that hand on the hot plate reaction on the stove. Ooh, I got burned. I don't like that. And I think that right now we're going to pay the consequence for quite some more time.
Whoa, sorry about that.
Bless you.
Yeah, I mean, even with everything coming on, the Fed still doesn't feel confident enough that I feel they're going to drop rates this upcoming meeting. We don't know, but it's just really tough to say with the economic data that's been coming out. I think they're going to be, very hesitant if they're going to make a move. And if they don't, I think we'll have a clear picture of what their next move is going to be, because I think dropping rates as low, taking it too fast and dropping rates sooner rather than later could also, create another issue. Or is the affordability is basically people are on the, everybody right now I feel like is pent up on the sidelines and they're waiting for rates to drop, which is the short-term problem. And as soon as that happens, even if your rates digress by 1%, that's going to cause a lot of prices to hold or go higher because of the affordability easing up a little bit, that all those people that were squeezed out are now able to get back in and afford at the level that they are comfortable with buying. And that's also something that I'm seeing a huge trend on, that if you're able to buy right now, a lot of people are starting to realize that this problem isn't so much with lending costs, but rather the houses that aren't there. And they aren't going to be there if more people are able to afford houses, because we see that the shortage of the houses aren't being built fast enough for the people that want to buy them. So we're in a very, very peculiar point, because I feel that if rates come down too fast, then we're right back to where we're at, and probably even worse.
Well, and what's happening already is that our median home price is like the highest. It's almost the highest it's ever been. So it's now kind of like recaptured a new local bottom, if you will. I mean, I was looking at it right here. It says in this article, it's citing that the median price is now $412,000 in February of 2024. Now, just real quick math. If you don't take that in half, what's that? $206,000. So it's doubled in price, and that 206. You look back on your graph all the way down to 2014. So in a short 10 years, it's doubled.
Yep.
So in 10 years, it has doubled. And when you look at its accelerated pace, it happened in 2020, right? 2020, everything just kind of went through the roof all the way through into 2022. And then March of 2022, the Fed started hitting rates. And then we had that localized bottom in the summer of 2022 where prices kind of like bottomed out, but they really didn't retreat more than like 10%. And then now they went back on a little bit of a tear, and we're here now at 412. Again, back above 400,000.
If only I would have bought my first house right out of high school and held it for right now, right now.
Terrible.
Different idea.
Yeah, job right out of high school. I bought a house. How much was it? $150,000. Well, the problem definitely correlates with the cost of money, because money was so cheap. If you look at the next chart, we have the average 30-year fixed rate mortgage was at the lowest ever in 2021. I mean, look, on the show, we have been, at that time, we were locking VA buyers at 2.25%. There were some loans, 15-year loans,
1.99,
under 2%, 1.99.
I think we did a 1.875 on a 10-year.
You know, if you recall in your mind enough, just go back far enough, you can remember getting a 1.9 APR financing on a sedan, on a Toyota Camry. Oh, jeez. But there's a huge increase of cost since 2020.
Yeah.
Now, I'm sorry. Well, increase, decrease. Sorry, hold on. First of all, rates decreased and plummeted when the pandemic happened. Now, that spurned on lending. It spurned on 2 back-to-back years of the highest mortgage rates ever recorded. Not highest amount of loans funded on record.
$4 trillion.
At the same time, that then pushed prices because, I can afford more because borrowing the money is so cheap. So that then happened. And then you had the Fed subsequently starting to march rates back up in March of 2022, which then really put on the brakes. I'm saying put on the brakes, but it was over like an 18-month period. They're like ramp rates. So it was like kind of like this slow depression of the brake pad on the train, and then screech.
It's when rates started really going up and you started seeing it in the market. It felt like it literally went from day to night, and affordability just got literally rug pulled. It was ridiculous because rates just completely flipped. And everything just every day just red. It was like, when is this going to stop?
Well, and affordability is a really hard conversation because I know people that have been watching our show are having an affordability problem. I also know that here behind the scenes and on camera in our day in, day out operation, we're still getting people qualified in San Diego, which is one of the craziest places to be qualified right now. But I will also remind you, or if it's the first time, you're hearing this for the first time, but I'll also remind you, if you've been watching us, we are in a part of the country where there is a high density of active duty military, specifically Navy and Marines. And then you also have, I've been seeing a lot of active duty married couples who are both pulling BAH every month. They're getting housing allowance every month. That combined housing allowance easily helps them afford in San Diego. Now, outside of that, the other people I see getting approved are they're married or they have single income with low debt, but they have a high earning job. They've been in the career a long time. They even have maybe a second job where they own a business. So there are definitely people getting qualified, but the affordability for, let's say, the clock in, clock out, hourly wage, salary wage, that has been under crunch. I don't want that to go overlooked. I certainly don't want to dismiss that. That is a pain point for us.
Yeah.
Because we are we are still in a community that's what people do.
Yeah.
Not everyone around us is rolling around in Beamers and Mercedes and Rolls Royces and all that. There's a lot of people that are just working their butt off every day to make ends meet, and they can't afford a home, and I think that sucks.
And unfortunately, that's the people and that's the demographic that hurts the most through this type of market, because they're the ones that, once it becomes even a little bit affordable, it's still tough. But at the same time, once it's just completely out of reach, and it doesn't just, break their confidence, but it could just deteriorate that whole dream of them even wanting to buy a house in general, right?
Yeah.
And then that gets trickled down to, their kids, their family, their generation, and then they just don't think it's something that they're able to do, when in reality it's literally just maneuvering, sticking through it, planning accordingly, and really having a structured plan, knowing where your money is coming out, because all that's going to make a difference. But if you're willing to make that sacrifice, we have clients that have gone in their houses, and then 2-3 years down the line, that house has helped them do so much, whether it's through a sale, it's a refinance, and it's literally a stepping stool that they now come back to us and say, I'm telling all my family that they need to buy as well. And that's unfortunately how it should be. It is a sacrifice. It is going to be a little bit hard right now, but if you have the opportunity and the means and you can, give yourself that opportunity.
Yeah, and the article goes on and talks about how much it takes to be a potential buyer in the market, and how disproportionate the amount that you need is compared to what the average income is. And here's the thing that sucks about the average income. I think they were citing in the article said the average income they used for this article was like $84,000, something like that. Okay. But again, typical household earns annually $84,000 according to this new study. But let's just say it's $84,000 just for the sake of conversation. That means there's people that are still not making that, Brian.
Yeah.
There are people at 70, 65, 50, 45. There's like no chance, unless you're in an area where the pricing is commensurate to that as well. What's happening here in San Diego is that there are people making $70,000, and that's not enough. And that used to be enough. And I think the death of the American dream, if you will, is something that's very real. I think it's happening for a lot of people. I think it's going undiscussed publicly because they're embarrassed, ashamed, or just pissed. Okay, and then they also people don't know what to do.
Yeah.
So if you're ashamed, embarrassed, or pissed, like, I get it, I understand. And if you don't know what to do, but you want to figure out what to do, then you got to ask. Ask, that's freaking figure something out.
That's where I feel the answer to a lot of problems lies, in asking and not knowing that you need help in certain things, but not knowing how to ask or where to ask. When in reality, it's you have the ability and you have the information to be able to leverage your house if you have a property, but it's really getting that information and applying it to whatever it is that you want to do. Surrounding yourself with people that are doing something that you want to get into, and leveraging your relationships more than anything right now, because it's a matter of fact, you're not getting by with one income, two incomes, minimum incomes. You're gonna have to get creative if you want to stay here in San Diego, but that ultimately is an opportunity for you to prosper in life as well. So it's like, it's a tough road, but it's a very rewarding road as well.
And here's what I'll say too, and kind of my last thought on this is, and this is kind of attached to what a financial planner who was interviewed in this said. She's basically saying like, hey, like if you do get into a house and you can afford, like, what happens if you lose your job? Like, do you have 3 months of payment saved? Do you have 6 months of payment saved? Like, so we had early talked about, how much you need to have as a down payment, closing costs, cover your agent if the agent's not going to get covered in the deal. And then do you still have reserves left over after all that's said and done? After you furnish the place, fix whatever you want, renovated, done all that. Wow, do you still have money left for 3 to 6 months of savings to be able to pay your mortgage if in case your job goes away? If you don't, and homeownership is not a good choice for you right now, figure out something else that you can put your money to work for you. I don't care if it's $50 a month or $100 a month that you need to put towards something that is growing. If it's not going to be in real estate, take some of that money that you would have been putting in real estate and put it into something else so it at least has a chance to grow.
You make such a good point, because, you're talking about the affordability, but in the back of a lot of buyers' head is like, what about my job stability? And that's something that, okay, if I do this, a lot of older people that I've been talking to, they're like, hey, I don't know if I'm going to have my job for much longer, so I don't know if I'm able to get, approved right now. And I'm like, hey, that's interesting that's coming into the conversation, because before it was not something that would be brought up at all. But now it's like, I don't know if I'm going to have a job in 2 years, so I don't know if I can make the investment, 2 years, thinking down 2 years down the line. So that's also something that is very important as well.
Yeah. Yeah. So I just thank you for giving me some space there. I just really wanted to make sure that, like, if you can't get in right now, and if you're choosing not to get in but you can, like, that's on you. That's fine. Mm-hmm. There's a reason you're waiting. That's fine. But if you're if you're not going to get in the housing market, I'm also saying to you, what are you waiting for as far as your financial future is concerned? Get into something. If you need a financial planner or talk to an advisor, find someone that you can talk to, that you can trust. Find something that's affordable for you to start something that has growth and compounding growth over the course of time that outpaces inflation.
Yeah.
All right. Brian, we're going to close on a high note today. We're going to talk about spring housing market forecast. This is coming in from Housing Wire. More inventory and rising sales. This is really kind of more of a shorter one today, because we've been talking about inventory. We know it's happening, but I really wanted to go over a couple of things that they're citing here. And again, this is all coming from accessible data on what's actually happening in the market. Sellers are coming back. Number one, new listing volume last week was 18% more than it was this same week a year ago. Ooh. And I know that is always a little bit wonky, because you go, well, wait till next week. It's only 5% higher than the previous week.
Anything will be better than last year, though.
Anything will be better than last year. Total inventory is gradually climbing about 1% per week. I'm impressed with that. 1% per week is really good. And last year at this time in April, it was declining. So we went from a declining market as far as inventory to now an increasing market, where inventory is gradually increasing about 1% per week. And then I saw down here, maybe it was the next page, there have been, where was it? There was 20 straight weeks of increased inventory. So
that's good.
Yeah, that is also a really good sign, because now you see month over month over month over month. You get 20 straight weeks of let's say a trajectory. That is definite indication of a trend change, and that trend change, I think, is going to be for the better.
Yeah, no, that's really good as well, because what I also saw that they stated is that people are looking for, stable rates, not low rates, and I like that, because people can't afford higher rates, but it's just about what that plays out for them in their life. So if that's affordable to them at that level, it doesn't matter if it's a 3%, 4%, 5%, as long as it's affordable for them and it's stable. I think with more inventory coming out, that's going to be less of a problem.
It's a great point, and I'm glad you said that. Actually, I was listening to Tom on PBD. I love Tom.
Shout out Tom.
Tom on PBD.
Biz Doc. He's a beast.
The Biz Doc. He had a great point. He's like, historically mortgage rates are at 4.5, or I'm sorry, historically mortgage rate at 5.5 to 6.5 has been like tremendous over the long course of time, 30, 40, 50 years. Now, I understand the prices have changed and the affordability landscape. I understand all the things that have changed. So before you get in the comments, this has changed. I know it's all freaking changed. But the point is that when rates are between 5.5 and 6%, 6.5%, that's historically a good place to be.
Yeah.
To Brian's point, in the past, I don't know how many times you said this, get in the market, and then when the market goes in your favor, that's icing on the cake. It's it's monthly savings to you to refinance down lower. Yeah, but I'm starting my loan over again. Yeah, but da-da-da. Okay, yeah, but when someone's $100,000 in debt, their house paid it off. Yeah, but
doesn't matter if you're getting back in debt.
Kids to go to college, the house paid for it. So I'm just going to lay up those couple things as evidence that people who are disciplined have done it, and they've made it work to their favor. But keep your eye on this 5.5 to 6.5% range. I think that's where we're going to land. I think inventory is going to like that. I think the market's going to like that. The Fed definitely wants to see that. And if the Fed's going to start dropping rates at some point this year, they're not going to go too far.
No, and I think that's a healthy place. And I know it's like some people might still be a little bit too elevated, but I think in the long term, that's a good place for us to be at for a little bit until we start seeing things gradually come down even more to levels that we're like, okay, inflation's kind of tapered off.
And so inventory, I think, is going to help people feel more confident in the stability of the market long term, because there was a lot of people shouting from the mountaintops that the market's going to collapse and this and that. Inventory collapsed, the pricing did not collapse, rates did not collapse.
So even, and realistically, like, home prices, I don't believe is going to crash like 40, 50%. So if there is a dip, that's the best bet for you to get in. And keep that in mind, because if you're going to wait for it to drop and tank, you're just never going to be, you're being very unrealistic. And
I'm going to tell you right now, they can't. And I know that people watch this show, they're like, well, yeah, that's great in theory that they can't, Andy. Okay, then here's what I want you to say in the comments. If you are waiting for the house prices to drop 40%, when's BlackRock going to jump in? When are they going to jump in?
They've never stopped.
They're not going to wait for 40% because someone else they're competing with is going to get it at 30% off.
Yeah.
And you're going to be sitting your ass out on the sideline waiting for 40% off, and you're not going to get it.
They're going to be already up and down.
And I'm not being conspiratorial. Like, they're buying up property left and right. And if you don't think so, you got to take a closer look, number one. Number two, if you think there's going to wait around for a 40% drop before they just add another home to their portfolio, good luck to you. That's not going to happen. They will take a 20% drop, 25% drop. 30 is probably pushing it because there's a lot of people with money already in at 20%. 40 ain't going to happen.
And I bet you that they're playing it like, hey, it's going to go even higher. I'm probably picking this up at a discount still.
Yeah. And they're not buying a house. They're buying bulks of houses, neighborhoods, portfolios of homes. I mean, before we get in this conflict and this argument about who's smarter than the other person, it's not about that. It's that they have access to the information, that they know where they want to buy, what they're buying for, how long they can hold. They can go in with cash. And if you have a purse that big too, all better for you to be in that situation. Great, go compete with them. But don't add us in the comments about it.
No, please.
You should be watching something else. You shouldn't be watching us. You got that much bag. So inventory.
I'm baffled, though.
Inventory. There's now 517,000 single-family homes on the market. That's 26% more sales now than a year ago, and we are on trajectory to have close to 700,000 homes on the market by August or September. That is awesome. That is so far beyond and better than the 250,000 homes when everything was super slow. That was very paltry.
Tumbleweeds in the market.
Yeah, and then back to the whole 20-week thing. Inventory is now expanded for 20 weeks in a row. That's where that came from. So
and that's good because a lot of this does push the social term to be like, hey, we want to buy. It's getting better because people buy off hype, and they do see the headlines and they do get excited, and then they start trickling down. One buyer that we got that was a little bit hesitant whether right now was a good time to buy. Once they got approved and they started getting out there, they saw the realities how the market really is. It's not just, hey, I'm going to go see one house. This is how it is. No, you're going to go see multiple houses. You're going to realize that the asking price might not be the best price for you to come in at because of the competition. But they're like, I'm understanding the pricing structure, how things work, the negotiations. And that's the biggest thing that I encourage people to do beforehand, because then once you get into the market, you're not going to be discouraged. You're not going to be surprised. Yeah. You're not going to get thrown off because this, and that. You're going to go into it like, boom, I already know what I need to do, how I need to do it to get my offer accepted because you've been trying and you've been going out there.
Can I say one more thing on top of that?
Of course.
That's great point. I love that you just said that. There's one thing that I want to make sure everyone knows to accompany that is if you go looking for a home and you're already qualified and you love it, so does someone else.
Yeah.
Someone else loves it too. So figure out what you are going to do to get your foot across the finish line first with the seller, whether it's terms, conditions, something that's going to put you in an advantage position to kind of outweigh the other bids and the other offers coming in. Because I'm telling you right now, especially in San Diego, I can't speak for every area in the country, but for San Diego, I know this to be true right now. If you fall in love with a house, someone else loves it too, and they're just as qualified. Maybe they are less qualified, but they are just as right to love the house as much as you do. So figure out for yourself and with your agent what you need to do to get your foot across the line first, not the competition.
100%. And just be open to understanding how the market is, have real expectations, and just take everything for what it is right now, because you don't know what tomorrow's going to happen. You don't know how rates are going to do, but only focus on what you can do right now.
Yeah. Great job today, Brian. Tell me, what was the favorite part of your show?
Inventory coming up. I think that data of 20 weeks of straight 20 weeks. I was kind of even concerned. I'm like, 20, is that right? Like, did I hear right? 20 weeks of rise in inventory. That's huge. I mean, that's the one thing that I've been preaching is the long-term problem, the big problem. And it's good to get that, that side of, positive data that it is leaning towards that. And we're starting to see a lot more activity just with people this last 2 weeks, talking to more people being active at open houses that I've been at. And more than anything, the curiosity is coming back. And that's something that I like because, for the longest time, I operated a lot in the social space, so I wouldn't get much interactions. And now it's popping up again, like, hey, how are houses? How is this house? Being at open houses. So that gets me excited because it lets me know that people are back into, that mode of like, hey, maybe it's time. Maybe we're going to do this again. And I really like that because people are coming at it with like, how do I get started? How do I get prepared before I get in the game?
You want to know something super dope and kind of nerdy?
Yeah.
That 20 weeks of straight inventory increasing, also correlates with the high mortgage rates at the end of October 2023.
Oh,
it started
what?
right after that. So 20 weeks ago was the end of the highest mortgage rates we'd seen in, decades. And since then, inventory has come back, and we're only 6 more weeks away from it being 2 full quarters of increase, which is half a year.
Let's go.
So that means something. I mentioned it during that segment of the show, but having a trend change is a legit trend change when you start seeing this much data within a confined space. Remember, our Fed increased rates over an 18-month period from March of 2022 in through 2023. Okay, well, then in the 20 weeks since the peak of mortgage rates, inventory's increased. There's correlating factors there for sure, number one. But number two, take into account the significance of this. This actually really means something, and it's a trend change, and that trend change upstream one more step is sentiment change on the behalf of sellers.
There it is.
All right. Favorite part of the show for me was 6 potential scenarios for VA and active duty military after the rule change. I really am confident that there's going to be a rule change for VA so that they can start paying their buyer agent.
Yeah.
I really don't think they're going to allow. I really don't think agencies or departments can allow for the VA borrower and the active duty borrower to get asked out from making an offer on a house or from having proper representation for their earned, fought for, and qualified eligibility. Yeah, sorry if I'm a little bit intense about that one.
The VA doesn't need that more smoke. I mean, they already got enough to deal with.
Yeah, I mean, look, yes, they're always going to have crap they're dealing with. But
I can't get an appointment. Now I can't get a house.
Hey, bro, this one would be. Look, there's a lot of things we could say. Oh, there's a black eye on the VA because of this and because of that. The Veteran Administration, blah blah blah. This one, when it comes to the VA benefit and being able to own a house in the country you fought for, that's not a black eye I don't think they're willing to take,
I think just in general, housing, I've been saying, is something that people all see eye to eye on, and you don't mess with this. You fix it, and you fix it now.
Yeah, so that was kind of my main takeaway for today's VA scenarios that could play out. Maybe there's a couple more on the horizon we just haven't thought of yet or haven't read about, but that was my favorite part of the show. Brian, thank you.
Of course.
Great job today. Loved having you on the show once again, and thank you all for watching. Remember to subscribe, like the video, and forward this on to someone you know, love, and trust. And if you have not yet checked out our other playlist called Friends of Mortgage Heroes, William, Brian, and myself introduce you to and interview our friends in and around real estate that do some really cool, dope things and have shared some amazing stories of having all the ups and downs of life in business and career. And I have learned so much and had such tremendous value coming from those interviews. So please be sure to check that as well. Thank you for hanging out with us again this week, and we'll see you all next week.
Bye, guys.